If you're an Australian and you're thinking about offshore structures, there's one mistake that causes more audits, failed strategies, and unintended tax exposure than anything else: starting in the wrong country. So before you think about where to go offshore, you must understand how Australia sees you, because Australia is a jurisdiction that will fight hardest to keep you in its tax net. Hi, I'm Virna White, CEO of WellSafe, and today I want to talk about countries that we would not use in 2026, even though they're still actively promoted to Australians. One country that comes up again and again is Belize. This isn't about headlines, it isn't about fear, it's about what still works under scrutiny. Belize is often marketed because it is English speaking, historically offshore friendly, easy to establish, and commonly pitched as tax free. And for very narrow use cases, Belize can still have a place. But the issue we see is this: most Aussies are sold Belize as a primary offshore structure without proper consideration of Australian tax law, control, banking, or long-term compliance. That's where problems begin. At WellSafe, every structure we design is engineered for legal precision. We don't start with a country, we start with residency planning, real commercial substance, control foreign company rules, central management and control, transfer pricing where relevant, proper remittance flows, and enforceable governance. We stay across what's coming out of the courts now, not what worked a decade ago. And we do this with a licensed professional team, tax lawyers, accountants, capital gain tax specialists, international planning experts, all working together, because real freedom isn't built on shortcuts, it's built on compliance. Now, here's the part that many offshore advisors skip. Even when a client no longer lives in Australia, the strategy still has to begin with Australia. Australia is your legal domicile, it's your place of abode, and it is the jurisdiction that fights hardest to keep you in its tax net. So it is always the first risk factor we assess. Everything we build is grounded in court rulings, ATO residency tests, CFC, CMC legislation, OECD frameworks, and proper international documentation. At WellSafe, compliance isn't the cost of freedom, it's the source of freedom. One of my clients, Michael, is an Australian citizen in his 50s. He had sold his business and was focused on preserving wealth, not aggressive growth. Another advisor told him, just use a Belize company, it's simple and tax-free. But when we look closer, Michael still had Australian ties, he still exercised personal control, he still needed reliable international banking, and he still needed a structure that could withstand ATO scrutiny. For Michael, Belize wasn't a solution, it was a risk multiplier. This is where context matters. For globally mobile professionals, founders, and high net worth families, the rules are different. Your income is mobile, your risk profile is higher, your clients and assets span jurisdictions. That means your structure must support regional credibility, seamless invoicing, efficient global banking, and tax-efficient mobility. Most people get this wrong by structuring for one country instead of the region they actually operate in. This is why Belize no longer makes sense for most Aussies in 2026. First, cost versus value. You're paying setup and maintenance costs without proportional strategic benefit. Second, banking fragility. Belize structures often struggle with stable long-term international banking. Third, audit optics. Belize raises more questions with banks and regulators, especially where control remains with an Australian individual. And finally, CFC and control risk. Belize does nothing to resolve Australian residency or control exposure, and if used incorrectly, it can increase tax risk. This matters. We are not ideological. Belize can still make sense for retirement stage individuals, minimal active income, lifestyle or local use structures with no need for global credibility or complex banking. In other words, lifestyle preservation, not global structuring. That's a much smaller category than most advisors admit. For Michael, we didn't use Belize. We stepped back and asked where control should sit, where banking was strongest, and what would still work in 10 years. We built a structure from Australia outward with clear separation of control, durable banking, and jurisdictions aligned with modern compliance standards. Not flashy, not cheap, but defensible. Here's the takeaway. In 2026, offshore structuring isn't about chasing tax-free labels. It's about risk-managed freedom, defensible compliance, and structures that survive scrutiny. So if someone leads with "this country has zero tax" without talking about residency control sequencing, they are not designing a strategy. They are selling you a product. At WealthSafe, we help Aussies move offshore legally, safely, and strategically, always from Australia outward, with compliance at the center of everything that we do. So if you're considering offshore structuring or something you've been sold doesn't sit right, visit wealthsafe.com.au and book a free 15-minute strategy call, because freedom isn't accidental, freedom is intentional, freedom is structured, freedom is built on compliance, freedom is designed.